Hello, everybody. I'm your boss, Joe Boss, and welcome to another daily plan. We got the BoJ decision coming out here in just a minute. Let me just do a quick little refresh. Yep, let's see here. How much time until the BoJ decision comes out here? Apparently, it was supposed to come out at 7 p.m., which was about 16 minutes ago. I'm not seeing any of the economic calendars update. Yeah, this was supposed to happen about 16 minutes ago. Anybody know what's going on in Japan at the moment? Because we were supposed to get this rate decision a while ago. So what's the dealio here? I'm gonna try refreshing all my news articles and stuff. I'll move us over to the FX heat map. Looks like the yen is actually weaker across the board here on the FX heat map. Yeah, no news. No news in Nikkei or Bloomberg or Wall Street Journal. I don't know. Let's go ahead and check the BoJ's website here on another monitor. Let's go ahead and check this out. Monetary policy, speeches, statistics. Oh, the loan officer opinion survey. Oh, I already read this earlier today. So, if that's not it, what is the deal? I'm still looking for answers here on a separate monitor. I'm not like misconstruing, right? We're supposed to be getting the BoJ rate decision. Yeah, I'm checking my notes here. January 24th. It's the 24th. So why is there no BoJ decision? Here, I have financial juice squawk turned on. Okay. On financial juice, all this says BoJ rate statement tentative, rate decision tentative. What's this mean? Why does it say tentative? Okay, so while we wait on the news to break, let's go ahead and check out the yen pairs and where we at. All right. Pretty negative yield spreads, especially on the younger durations, 1 to 3 year. Once you get to 5 to 30 year, yield spreads are still fairly positive, but they're moving in a direction that indicates that the yen should be getting stronger on a yield spread section. This is our expectation that we set about a week ago. Oh, we want this and that. So we'd probably want this theme to close a little lower. Yeah, somewhere like down here. That's what we'd like to see if you're a yen bull going into the end of the week. Yeah, that seemed to hold up on the seasonal odds. Let's go ahead and check this out. Those are some pretty good odds for next week. Looks like next week is going to be quite range bound based on the seasonal data, if I'm not mistaken. Wow. That is a very range bound trading week on the dollar yen. So maybe something along these lines next week. Let's go ahead and check out the economic data for next week. Consumer confidence in Japan on Tuesday. Not a whole lot of stuff going on here for Japan. You do get, of course, the Fed meeting on Wednesday. That'll be kind of a big deal. And then Bank of Canada, we can go ahead and check out something like dollar CAD. We just had some news move. I know you probably saw it when I pulled up financial juice earlier. The whole thing with Trump, I would rather not have to use tariffs over China thing. Guys, I know it moved the dollar, but that came from the recorded interview with Hannity. That's just kind of old now. It's not going to be his official policy, and that's extraordinarily vague. I wouldn't be using that to be making any kind of decision. So any kind of weakness in the US dollar, I would be...
BoJ raises short-term interest rate target to 0.5%.
Oh, we got it.
BoJ to make monetary policy decision in January 2025. Bank of Japan increases overnight call rate to 0.5% as anticipated. BoJ decides on rates with 8-to-1 majority vote. BoJ increases short-term interest rate target. BoJ updates policy statement title. BoJ, board forecasts core CPI to reach 2.7% by fiscal 2024, up from 2.5% in October. Bank of Japan raises rates with an 8-to-1 vote. BoJ projects FY 2025 core CPI to reach 2.4%, up from 1.9% earlier. BoJ board member Nakamura dissents from decision to raise rates. BoJ sees Japan's actual interest rate at significantly low level. BoJ, real interest rates are at very low levels. BoJ, board forecasts real GDP to be plus 0.5% in fiscal 2024, lower than the plus 0.6% in October. BoJ to raise policy rate if economy and prices align with forecast. BoD increases overnight call rate to 0.506. Bank of Japan to continue raising interest rates if outlook is realized. BoJ, board's real GDP fiscal 2025 median forecast at 14% vs 11% in October. BoJ, board's core CPI fiscal 2024 median forecast at 2.2% vs 2.0% in October. BoJ to conduct monetary policy in line with sustainable, stable achievement of 2% inflation target. BoJ projects 2.7% core CPI for FY 2024, up from 2.5% earlier. Bank of Japan raises overnight call rate to 0.50%. BoJ predicts FY 2025 core CPI ex energy to reach 2.1%, up from 1.9% previously. BoJ to adjust degree of easing if outlook is realized. All three BoJ projections see underlying inflation at 2% or above. Yen fluctuates as BoJ raises rates. BoJ to implement appropriate policies based on economy and prices. BoJ expects GDP to remain at 1.1% for fiscal year 2025, unchanged from previous forecast. All six Bank of Japan price forecasts indicate inflation at 2% or higher. BoJ lowers FY 2024 GDP forecast to 0.5% from 0.6% previously. BoJ sees balanced risks to economic activity. BoJ's Nakamura dissents to rate hike decision, calls for review of money market operation guidelines at next meeting. BoJ, chance of Japanese economy meeting forecast increasing. BoJ decision leaves yen trading at around 156 against USD. BoJ sees upside risks for prices in fiscal year 2024 and 2025. BoJ, economic risks balanced, price risks skewed to upside. BoJ report, uncertainty around Japan's economy and prices remains high. BoJ to maintain supportive rates to boost economic activity. BoJ, Japan's economy recovering moderately with some weaknesses.
Okay, I'm gonna put that on mute now. That's enough of the guy just repeating BoJ, BoJ, BoJ. So that would be my expectation for the week ahead if I was just using the seasonal data from the probability pivot points, and they do line up with the ranges here, right there and there. So now the question is just where does the thing end up closing next week? Yeah, let's stay on the more conservative side of our closing expectations. But this makes sense to me, that the dollar would get stronger going into the FOMC hold. And yeah. And maybe Powell says something defiant against Trump, saying, "You can't get rid of me." And then that really sends this up, from here to here. Not the end of the world, but, a little clap back from Powell to Trump or at Trump would certainly do something along these lines. And then on the last trading day of the week, we see on February 1st, probably some front running going into February 1st for the Canadian dollar. The tariffs are imminent. And then where is it? Oh yeah, I don't have it pinned here. USD MXN. Wow. Dollar is getting quite last few days, probably because of some overhyping. And I say overhyping explicitly because there's zero sign that those 25% tariffs are not not going to be put on. That's like, yes, we can anticipate that's going to happen, and that will probably make the dollar stronger. It'll probably be a safe haven for a lot of these companies doing business with the United States to have their companies in Mexico or Canada. All right, we got the BoJ statement. And it seems like we got everything read to us here. Likelihood of realizing the outlook has been rising. So all this stuff about seeing higher inflation, we got the year-over-year inflation numbers earlier, and those came out higher than expected too. Yeah. All looks good on the yen side of things. So, yeah, I mean, we can go back and look at the yen, but it doesn't seem like we're getting anything other than pretty much what we were expecting. It's a volatile 1 hour, and yen should be on its way down into the end of the week, beginning of next week, and then rise up as we get into FOMC. I don't have too much commentary for today because most of the stuff that happened today happened around Trump. You know, maybe I should say this because it was a big day. A lot of really important executive orders got signed. I have to point out that the US isn't the only place where things are happening right now in the world. I don't know, we are 26 minutes into the stream, and I'm only now kind of getting into a talkative mood, but stay with me here. Because this last thing that moved the market for dollar weakness, saying, oh, Trump said such and such a thing in a pre-recorded interview. It's like, sometimes I think these guys who trade markets off those announcements, well, at this point I'm fairly certain they're just robots reacting to that news. That's it. They don't know how to contextualize Trump's actual policy and position relative to the headline. And so you have all these robots loaded with tens or hundreds of millions of dollars, let them loose on these markets, with this sentiment approach that isn't actually reading the nitty gritty of the sentiment well enough. Because it was just the latest dollar strength move is just, in my opinion, totally fadeable. Yeah, this thing that happened in the last hour, I'm looking at the news, I'm like, okay, this changes nothing, and this was a recorded interview from the day he was inaugurated, from January 20th. It's information now that's 3 days old. This is just hyper reaction to anything that Trump says. And, if you're able to identify, like, oh, that's very clearly an overreaction, it's like, well, why don't you fade it? It's like, I'm already positioned. I'm already waiting for the market just to do its thing, I'm already sitting by and waiting for things to work out in my favor or to actually prove that I'm wrong. You If you can't figure out your own thesis, you can't set your own expectations, you're going to have a really hard time determining when you're actually wrong on a trade. And you can, you know, if you lack that skill, you can very easily chop yourself out of a lot of money. By chop yourself out, I mean you could be getting in and out of positions so rapidly that you're just paying the spread over and over and over again, plus whatever fees there are. And you're just losing money, just getting in and out of positions because you can't make up your damn mind. And then the slightly better improvement, if you could call it better, is maybe getting in and out of trades over the span of an hour or multiple times in a day, right? You could technically define that as day trading, but I mean, it's like you're being indecisive and you're trading air on the news. Like you're whether or not you actually make money is probably worse than a coin flip as far as probabilities go. But it's not just Trump, remember, that moves these markets. We got big news out of Germany today. We got news out of the UK today. I mean, I could bring up this stuff here. I was talking with Big about this earlier, the whole thing going on in Germany. Yeah, here you go. German federal elections. The CDU is taking a nosedive, and they've finally fallen below the 30, the last couple of polls from last week before all this news with the latest knifing came out. I think I'm about to butcher this. Asha Fumberg. I think that's how you say it. That's how you say it in a lazy-ish way. Merz came out with this 10-minute speech, and people criticized him because he's technically a part of Angela Merkel's policies and party, who instigated a lot of these things over the last decade. And Weedle posted this huge open letter. There's some political happenings in Germany today. This is, we have the Trump watch thread in here for all this stuff, right? Like as soon as this announcement of I'd rather not use tariffs over China, that came from the pre-recorded interview. This statement, as soon as this came out, it was in the Trump watch thread. I posted it. And again, if someone else comes and finds something first, I encourage you to post it. And then we went over the executive orders and the whatnot, and David Sachs was there, and they did the crypto executive order. A lot of people kind of glanced over how now CBDCs are banned. I'm very happy, actually, about this, because I don't want corporations being able to essentially become their own bank and have to compete with banks and have their own separate, looser regulations separate from banks. Like, look, don't get me wrong, maybe at some point in time we have a CBDC. It's just the system and the incentives around it need to be way more thoroughly fleshed out. Because the system we have right now, what a lot of the world has right now, also, I didn't see any update on this thing with Bukele. I didn't see any update on the call. Trump, and maybe they didn't have the call. I don't know. So there's just some Trump stuff. There's stuff going on in Germany. You'll need to follow this because the German elections on February 23rd. So we just had a major political happening today. I'm not going to talk about it because it's a, fairly violent event. So if you want to read the story of what happened and the background behind it and all this sort of stuff. And I've tried to use translation, automated translation tools and, copy paste what they've said, translate it into English. But if there's any German speakers who can go at this and help me with this and get through the information more quickly, I would really appreciate it to help, form and communicate opinions on Germany and German politics, especially. That'd be quite helpful. Canada, there was a thing where Trudeau wore his shirt backwards today. Big news in Canada. Great. And then France, not a whole lot going on there. In France, there was something that happened in France. They did get the preliminary finance bill in France passed today, and apparently it goes for another vote next Thursday. And if that vote passes, the government will be funded for 2025, is my understanding. So there's going to be, and this is on the same day, by the way, next Thursday is also when the ECB is meeting, right? Here's Thursday. This is when the ECB is meeting. Yep. Deposit rate facility. That's the ECB meeting. So the same time when a major part of the European economy is going to vote on a finance bill, the final part, whatever compromises that they want to make, that's also next Thursday. It's going to be a big deal next week for the euro. Like, if this thing doesn't pass and the ECB cuts 25 basis points, that, like, this thing not passing alone, it's kind of a given the ECB will cut. This, though, if this for whatever reason doesn't go through, euro dollar is going back into the 103 handle. Like, it's going back to these lows. It's going back to these lows over here. We're going to be doing a quick one of these on the euro dollar if we don't get, where is it? There we go. I'll just move this guy up there. There we go. Yeah. So if this finance bill doesn't go through, that'll be that for France. We got a huge article here out of Nikkei summarizing the current political environment in Japan. Freaking fantastic article. And then UK. Oh yeah, there was a huge another immigration related happening in the UK. And they also have 2 months until OBR. That's right. Yeah. I will announce new fiscal measures on March 26th. UK's Chancellor Reeves. So there's stuff going on in these other countries, and I swear to God, if you're trading these things, please try and follow the politics of the countries that you're trading, because otherwise you can get blindsided so damn quickly by not paying attention to the politics of the countries that you're trading. Just because you look at the US dollar and you follow US politics doesn't mean you get some like free get out of jail free card to just ignore the other side of the pair and the politics and the fiscal policy and the monetary policy of the other side of the pair. Nor, and just to focus on the monetary policy, just learning about the monetary policy will get most people by in trading, but that's genuinely not enough to have staying power. You have to know what is going on in that country. Because if you can understand how the political winds are changing in a country, you can understand how the Ministry of Finance or the Secretary of Finance, the person in charge of the purse, the fiscal side, can impact and pressure the monetary side. Because the monetary side, the central banking side, can react off what the politicians are doing. And if you get a new political regime, or your political regime collapses, like what happened with Germany last quarter, or France, or Canada, it's like one country after the other collapse. And what happened to the US dollar just as the election was coming about? The US election, that is. It's like the perfect catalyst there to have such an insanely strong dollar. And I don't need this line here. But set and fine if you're wrong on your expectations. The whole point is that you just learn to set expectations, and then when you're wrong on your expectations, you review, you find out why you were wrong. And then you build on that. Every time you're like, oh, this thing moved because of X, Y, and Z event. Gee, I wonder how I can make sure I'm informed in the future, so that then if an event like that happens again, I'm not blindsided. And if you do that for one event after another event, after another event, after another event, and then begin to preemptively do that work so you're not blindsided by each and every little thing that gets said, then it'll be 10 times easier for you to set expectations. And, don't get me wrong, you're not going to have 100% hit rate. No one is 100% correct on expectations. You're not a prophet, right? Anyways, hopefully the rant at the end of the stream has been at least entertaining. I'm on the more tired side at the moment. I'm usually, given the trading schedule I usually have of having to get up at usually at least 3 a.m. every day, having to stay up to 7, 8 p.m. has me in a bit of a slightly different mood. But again, take advantage of the research forum, right? Take advantage of the research forum. And we had some more outlooks posted today. Some of the early Thursday outlooks that get posted. Tomorrow's Friday, more outlooks are going to get posted. We'll do some week ahead charting. It's been a while, but we've had Trump and a bunch of analysis. We'll do a week ahead charting stream, so we will look at of the tools that I have, and we'll look at some timing dots. We'll look at a bunch of stuff. Wow, look, there's some dots way up here. You don't have a whole lot of lows that come in right around there, do you? On the Aussie dollar around this time. Yeah, look. 1, 2, 3, 4, 5, 6, 7, 8. And it seems like most of the tops for the month come in on this bar. So sometime on Tuesday, the top for the month on Aussie dollar might just be coming in. We'll see. We'll see. We'll do a more holistic review of at least the week ahead, right? looking at some of the probability pivots for the week ahead and whatnot. So yeah, we'll look at some week ahead stuff in tomorrow's stream and go over economic events also for the week ahead and just kind of plan out like, okay, here's a couple of things that are going on that we're looking at. Here's a couple of expectations that we have. Should dollar be getting weaker right about this time? We'll see. Those are pretty good bearish continuation odds, I must say, on the DXY for next week. Yeah, so maybe it comes down and you do something. Maybe you do something along these lines here. Let's see. How surprised would I be? No, that actually that fits the glove quite well. So depending on if Powell gives a snapback, if Powell claps back at Trump saying, you can't tell me when the cut rates, I can, I the one who determines when we cut rates, then the dollar is gonna get stronger because you're getting more conflict and that increases uncertainty. And oh no, Trump might get rid of Powell. Oh my God, I promise we're gonna start to get reports written over the weekend and into the FOMC meeting next week on Wednesday. All these articles, and then into Powell's presser next week. I bet money on this that we get articles 100% saying, "Oh man, when is Trump going to replace Powell?" Because remember, that was a whole conversation a few months ago in September or October. Trump said something along those lines. Oh, maybe I can replace him. And people are like, oh, legally you can't, but you sort of can. You'd have to have a shadow Fed chair, right? That whole idea. Oh man, yeah, that's going to be next weekend's reading, next Thursday, next Friday. That's what we're going to be bombarded with in Bloomberg and Reuters. We'll get in Wall Street Journal. I'll get like 20 emails about it. I 100% bet that's what's going to happen next week. After Powell gives his speech, and people are going to be, even if he doesn't say a peep about it, people are going to be talking about it because it's already in the zeitgeist. Oh, is Powell going to get replaced? Is he going to get replaced? He's not going to get replaced. And especially if inflation continues normally, and if the tariffs don't have anything but transitory inflationary pressures, is the technical term. That is only a 2 to 4 month build up in U.S. inflation, right? So if inflation goes away by the summer for any tariffs that get put on here over the next month or so, then yeah, the rate cutting cycle for the Fed will begin in the second half of this year. Simply put, if there is no inflation bump whatsoever, then the Fed's going to start cutting probably in the middle of this year, if everything goes smoothly economically, right? If if we just get back to growth. One thing to keep in mind, right, is the dollar smile theory. You want to look at where there's higher growth relative to the United States for getting risk on something versus the US dollar. And we got some news that there were some negotiations going on with Zelensky and Trump and Putin apparently meeting, right? Those talks are continuing forward. Well, if that happens and the Ukraine Russia war ends, the euro is like that thing's now going to, I'm saying, oh, if finances in France go to shit, it's going to go back to 103, 102. 102 is a new thing, but 103, 102. It'll fall 150, 250 pips. Next Thursday, oh my God, it's imminent. But then again, just as imminently, you could get information about, Trump is going to be meeting Putin, or, negotiations are picking up, right? If the likelihood of the Russia-Ukraine war ending and a ceasefire and all that, negotiations start ramping up, the expectation for Europe to continue printing all this money and printing all this money for the war is what's causing a lot of these fiscal problems in Germany and France and a lot of Europe. I mean, that'll take a huge pressure off them. A huge pressure. Now, I know Trump is saying, you have to spend 2 to 5% of your GDP on military. But that's over the longer term. That could be over a longer time horizon. The war in Russia and Ukraine, that war ending now would have a lot of the downside pressure. I mean, we could go back and look at the chart's history, right, for euro dollar. But on any sort of continuation or announcement that the war is over, the thing's probably going to go very easily 107, 108. Like it'll very, very easily get back to these levels here when Trump was inaugurated. Like all this stuff here was tariff threats. And just continuation, man. Oh, this was just so juicy. But now it's more or less, okay, what's the next thing? Are we actually going to get tariffs? Are we actually going to have the war end? And there are, over the last few days, rally here has been due to those tariffs being less intense. And if we get new information around the Russia-Ukraine war, possibly getting more negotiations, that'll put even more upside risk to eurodollar. I've even seen people who write outlooks who are perma bears on eurodollar, who've been calling for eurodollar parity. In the last week, everyone who's had a call for eurodollar parity suddenly has stopped rehashing. Has stopped rehashing their expectations for eurodollar parity all of a sudden. So, are the eurodollar parity expectations suddenly going away? Kinda. We'll have to see going forward, but my money is now on. Well, we're probably going to see a higher eurodollar unless France and Germany can't get their shit together. I mean, get this: if France next Thursday passes their finance bill, and then in February the AfD wins a majority government and can pass pretty much whatever legislation they want. They form a coalition with maybe one other party or something because they get big enough, especially after the political happening from today in Germany. So you have those two things happening in France and Germany, and then you have the end of the war in Ukraine, and you have less tariffs than originally expected getting put on by the United States, or some kind of negotiated tariff that's lower than expectations. Like, there are reasonable upside risks here that could stack one on top of the other in reasonable form here to see Eurodollar actually appreciate and overcome a lot of the FUD that has been around the euro itself. So I think with all that said, I'm all good on my rant today. I'm in a better mood now. I've had my my daily market rant. I'll be on tomorrow for the PMIs early in the morning tomorrow. So, there'll be another stream happening here shortly. Anyways, with that all said, I will see you all in a bit.